Gold just crashed 22% during a war. Let me say that again. The asset that was literally invented to protect you from exactly this, geopolitical chaos, inflation, conflict, just entered a bear market while the Middle East is on fire. And Bitcoin up nearly 8% in the same window. Now, most people will hear that and say, okay, Bitcoin got lucky. Yeah, just like you did, right? Give it time. It'll catch up to the downside. But I don't think that's what's happening. And neither do some of the most sophisticated macro investors on the planet. $7 trillion has left gold since January. $7 trillion. And everybody's asking the same question right now. Where is it going? Today, I'm gonna tell you exactly what I think the answer is and why the answer matters a lot more than most people realize.
You can't handle the truth!
I'm Sophie, welcome back to Satoshi. Let's get into it. Here's the thing about gold. The entire bull case for gold, the reason that people have held it for centuries, is that it holds value when everything else falls apart. Conflict breaks out, inflation spikes, governments get unstable, gold goes up. That's the deal. Except that's not what's happening right now. Since the US-Iran war started, gold is down 17%. At its worst, it was down 22% from its all-time high, officially entering a bear market. Silver followed it down. Meanwhile, Bitcoin is up nearly 8% over the same time period, confirmed by CNBC. JP Morgan called it an extremely brutal flush, but even they maintain a long-term bullish view on gold, essentially saying that the fundamentals should eventually turn bullish again if the war drags on. So, what actually happened? Why is gold doing the opposite of what it's supposed to do? And here's the honest answer. We're probably in a liquidity crunch. When people don't know what's going on, and right now, nobody does, they don't run to gold necessarily. Some people run to cash. They pull off the top, sit on dollars, and wait until they can see clearly enough to redeploy. Gold's bull run last year was real, but a lot of people made good gains and they're taking them. That's the unsexy explanation. But here's where it gets interesting. While all of this is happening, while gold crashes, while the S&P swings billions in minutes, while bonds get hammered, Bitcoin is up 7% since the war started. Now, 7% isn't an explosion. It's not the Omega candle we were all waiting for, but that's not the point. The point is what it means in context. A macro analyst named Fernando from Bitcoin Perception put it perfectly. He asked, what did we actually think Bitcoin decoupling would look like? Most of us assumed it meant Bitcoin goes up while everything else stays flat. But what if that's not how it works? What if decoupling just means everything goes down a lot and Bitcoin doesn't go down as much? Because that's exactly what we're seeing. Stocks are down, gold is down, bonds are down. Oil went crazy, and Bitcoin is sitting at $70,000 holding steady, not flinching. And here's the data point that I keep coming back to. Bitcoin priced in gold, not dollars, in gold, the bear market historically lasts about 14 months. We are at that 14-month mark right now, which means if you're measuring Bitcoin against the asset it's supposedly competing with, we are already historically at the end of a bear market. That doesn't mean that the price is going to explode tomorrow, but it means that the narrative that Bitcoin is some fragile speculative asset that crumbles under real-world pressure is getting harder and harder to maintain. So, the big question, is that $7 trillion that left gold heading into Bitcoin? Honest answer? Probably not yet. Not most of it. BlackRock and Fidelity were net buyers of Bitcoin last week. The ETF saw about $400 million in inflows against $250 million in outflows, a net $150 million flowing in. In the context of $7 trillion leaving gold, that's a rounding error. But here's how I think about it. People sitting in cash right now are not sitting there forever. They took profits on gold, they're watching what happens with the war, with bond yields, with the S&P, and they're waiting to deploy. The question is, where? and when. And increasingly, the case for Bitcoin as that destination is getting stronger, not weaker. Not because of the hype, but because of what Bitcoin just did. It held during a war while everything else didn't. When institutions look at that data, and they are looking at it, it starts to shift the conversation from is Bitcoin a speculative asset to is Bitcoin the new neutral reserve asset? That is a fundamentally different question, and it's the one that starts a very different kind of capital rotation. And look, if you're watching institutional money start to rotate into Bitcoin, the last thing you want is to have your coin sitting on someone else's platform. That's where the Bitcoin way comes in. Your personal Bitcoin IT team, self-custody training, cybersecurity, Plan B residency, over 20 years of expertise. They simplify the whole thing so that you stay in complete control of your stack. Book a free 30-minute consultation at thebitcoinway.com/simply. Tell them Satoshi sent you. Now, here's the part that should make you uncomfortable if you're still trusting the traditional financial system to protect you. This morning, before this episode, President Trump posted on Truth Social that the US and Iran had very good and productive conversations about ending the war. In 6 minutes, the S&P added $2 trillion to the market cap. 6 minutes. Then Iran denied the whole thing. And in the next hour, the S&P erased $3 trillion. $3 trillion gone in 56 minutes on a tweet. No, on a Truth Social post. Oh. Meanwhile, the 10-year bond yield broke 4.4%, and bonds are supposed to be the safe haven when stocks are volatile. Well, they're not acting like a safe haven. Oil went insane when the Strait of Hormuz situation escalated. Then, Trump's Treasury Secretary walked it back on a Friday afternoon. Gold crashed when it was supposed to rally. Everything the traditional financial system told you would protect you, bonds, gold, equities, is behaving erratically, except Bitcoin. Bitcoin just keeps chugging along. And I'm not saying Bitcoin is perfect. It is. I'm not saying that the price won't drop.
What are you saying? What are you saying? What is he saying?
What I am saying is that when you look at all of the data, not just Bitcoin in a vacuum, but Bitcoin relative to everything else, it is the only asset acting with any kind of consistency and integrity right now. And the SEC and CFTC just made something very clear last week that I think matters here. They put out a joint framework formally classifying Bitcoin as a digital commodity completely outside securities law. No issuer, no company behind it, no fundraising, just an asset. The only truly neutral digital commodity that exists. While governments are printing money, fighting wars, and moving markets with tweets, Truth Social posts, cringe. Bitcoin has no CEO to fire, no board to pressure, no central bank to cave. That's not a feature people fully appreciated until right now. And if this is the moment you're thinking, okay, I actually need to own some of this, here's the easiest way to do it right. Bitcoin Well is the self-custody Bitcoin on-ramp. You buy Bitcoin directly into your personal wallet. No custodial risk, non-custodial by design, trusted by 50,000 plus users, publicly traded, daily recurring buys available. Sign up at bitcoinwell.com/simplybtc. Through our link, you get 3 chances to win 1,000,000 sats. That's 0.01 Bitcoin. Not nothing. Sign up at bitcoinwell.com/simplybtc. I want to end on something that didn't get enough attention last week because it's exactly the kind of thing that sneaks up on you. The EU's Anti-Money Laundering Authority just announced it's preparing guidelines due by July 2027 that would require crypto exchanges to verify the identity of anyone using a self-custody Bitcoin wallet before sending them funds. Read that again. They want you to attach your government ID to your private keys. ways. If an exchange can't verify that you are the owner of a self-custody address under these rules, they potentially can't send Bitcoin to that address. This is the surveillance cage that Bitcoiners have been warning about for years. Bitcoin is the most transparent financial ledger ever created. Every transaction visible to anyone. The only layer of privacy you have is that your wallet address isn't automatically tied to your identity. The EU wants to remove that layer by law. And this is happening at the exact same time that the EU is rolling out a digital ID system and doubling down on central bank digital currencies. These things are not unrelated. They're building a complete financial surveillance system, and they want Bitcoin inside of it, not outside it. The fix is the same thing that it's always been. Take self-custody of your Bitcoin. Take your Bitcoin off of exchanges. Hold your own keys. Don't voluntarily connect your identity to your wallet addresses. If enough people do this, it becomes technically and politically impossible to enforce. But the window to do it quietly, without pressure, is not going to stay open forever. So do it while you can. And if you want to be in the room where the next chapter of Bitcoin actually gets written, Mining Disrupt is where that happens. The world's largest Bitcoin mining expo, biggest names in the industry, cutting-edge rigs, Bitcoin and AI integration, live stream keynotes, and networking you cannot get anywhere else. Grab your tickets at miningdisrupt.com and use promo code SimplyBitcoin for 20% off. Do not sleep on this. I've been thinking a lot this week about what it actually means to protect your family financially. I'm a mom of two, as you guys know, and when I look at what happened in the markets this week, $3 trillion wiped out in under an hour because of a social media post, gold crashing during a geopolitical crisis, Europe building a surveillance cage around financial privacy. I don't feel scared. I feel clear. This is exactly why Bitcoin exists. Not as a get-rich-quick scheme, not as a speculative bet, as an exit from a system that has shown repeatedly and unmistakably that it is not designed to protect you. It's designed to serve itself. Gold failed this week. The S&P failed this week. Bonds failed this week. Bitcoin did not. That's the signal. That's always been the signal. You just haven't been paying attention. So stack your coins, hold your keys, and don't let anyone, not an exchange, not a government, or a well-meaning regulation, get between you and your Bitcoin. That's what this has always been about. So thanks for watching Simply Bitcoin's Satoshi. Don't forget to smash the like button, share the show with your friends, drop a comment below. I read them all. Guilty as charged. Follow me on X at InternetSophie, and as always, stack, slay, and stay bullish, baby.